Hey, everybody. Kim Tucker here with Mid-America Association of Real Estate Investors, and I want to welcome you to today's MAREI Partner Cast. Today, we have some great guests with us to teach us a little bit about reverse mortgages. I know there's a lot of different things going on with reverse mortgages, but unfortunately, while it's not new, it seems really new because most people don't know a lot about it. So Alice was talking to me a little bit about that. This is a great product that they're working with over at the roller team at Leader One Morgage. And she wanted to join us and tell us a little bit about how all of this works. So I'm going to first introduce our two guests, AliceLund with Leader One Mortgage on the roller mortgage team. And she has brought her resident reverse mortgage expert, Kelsey Walsh, to join us so she can answer a few questions for us. So we'll start with Alice and let you tell us a little bit about yourself, and then Kelsey.
Yeah, thanks for the introduction. So AliceLund, like you said, roller team at Leader One. I've been an active member of MAREI for I think about 2 years now. So we did start this reverse mortgage product pretty recently, and it's been really important for us, I feel like, to go out and just talk to people about it, because like you said, it's not it's a product that people don't know a lot about, or maybe you have certain views and opinions, and we just want to be out there to educate. So we've gone out to a lot of the real estate teams that we've worked with. We've gotten a lot of positive feedback, a lot of light bulbs have gone on for people that realize that maybe they know somebody that might benefit from it, or they understand where it could be valuable. I'll introduce Kelsey Walsh. She'll be doing most of the talking today because she is our expert. Go ahead, Kelsey.
Thanks. Hi, Kelsey Walsh. Thanks for having me. Been working on these reverses and learning a lot, and always continuing to learn. It's been really fun and exciting. And I think kind of what we talked about a little before is just getting the education piece out there and making sure people understand it, because I think it's sometimes misunderstood. And also it's just important for people to know that it's an option out there. I've been with the roller team a little over a year. I have 2 beautiful kids. And I love helping people with their home financing.
Excellent. So let's just first start off. We all know what a regular mortgage is on our house, but how is a reverse mortgage different?
Yeah, so the easiest way to describe it really is to compare it to a regular mortgage. And when we're comparing the two, we call a regular mortgage a forward mortgage. And that's when you have a loan, your home is collateral, and you make payments, mortgage and interest back monthly. A reverse is the opposite. You have a loan, your house is collateral, and you don't make payments. And at the end of the term, it's when the last person either leaves the home, whether they go into a nursing facility, long-term care, or they pass away, then the mortgage is paid back, principal and interest in full.
Okay. And how soon do they need to pay that interest and principal in full? So I'm assuming they either go get a new mortgage or they sell the house. How soon do they need to do that after the name on the loan is no longer living in the house?
Sure. And this is a very popular question. So if they leave the house and go into a long-term facility, they have up to 12 months. So it's wherever they live. I know you kind of asked this, I saw your email, for a majority of the year. Sometimes they might leave for a bit and then come home, or they're not sure. So they have a year in that sense. If they pass away, the lenders keep track by death certificates, and they send notice to the heirs within 30 days to let them know that, hey, this is a process we're starting. You have 60 days to kind of let us know, get an appraisal. Then they actually have up to a year to figure out what they're going to do. They can either buy it, they can give a deed in lieu of foreclosure, just let it go, or sell it.
Okay. All right. So let's move on here. My next question. Why do people choose to get a reverse mortgage? What are their uses? What do they use them for?
Sure. It's to be able to access the equity in your home without having to have a mortgage payment. And you can use that for whatever, whether they need it for health expenses, home repairs, maybe they want to travel. There's also a lot of really fun retirement strategies around tapping into some of that equity, maybe in a down market. But there's a lot of uses for it.
So they can tap into the reverse mortgage, invest in something that pays a better return, and make a return on their investment.
Sure. Or some of the examples we talk about are they could defer their Social Security. so that they get more. Or if you are on retirement and it's a down market and you don't want to necessarily be taking all that out, think like 2008, you could access this. One cool thing about it is it's income tax free, so you don't have to pay taxes when you withdraw on it. And I don't know if this was going to be a different question, but there's different ways to tap into that equity. They can open just a line of credit just to be there if they need it. They could take a lump sum to purchase an investment property or a second home, or help pay for kids' college or grandkids' college, or home repairs, or they can withdraw an income, a monthly income that pays them.
Okay, so that makes some interesting sense. I was actually reading an article, I think on the Motley Fool, that was like, oh, you might want to do this, the lump sum, so that you can invest in stock that was going up really quickly. Don't advise anybody to do something like that, but they were a stock advisor, and so they were suggesting that might be an option.
Right. So and then like along those lines, like one of the things that, you get, if a person wants to stay in their home, let's say, but and they're fine on their income and everything, but they don't want a mortgage payment. But they have to reside their house, and let's say it's really expensive. It could be a way to tap into your home's equity to just do something like that, so that your home is able to be maintained without having to take a huge chunk of money out of your savings or go into debt and have a payment.
Okay.
Yeah.
So if I'm going to do a reverse mortgage, who's going to own my house once we get all the paperwork done?
You still keep the rights to your house. You still own the house. Just like in a forward world, a reverse is a lien on your property. With a balance, and then it's accruing interest over time.
All right. Are there different, well, I think you've talked a little bit, but what are the different types of reverse mortgages? Or is that kind of what you were tapping into with the different ways of taking the money out, or are there other kinds of reverse mortgages?
Yeah. Well, I touched on the refinance ways to tap into your equity. And I mentioned the 3. You can also do a combination of them. So you could open a line of credit, take a chunk, but still leave some. You don't have to take the max amount that it allows. Also, one thing I didn't mention, we're talking about reverses, but we really are talking about HECMs, home equity conversion mortgages, and they're the FHA insured version. So why this is important is FHA has put a lot of things in place since 2008 to really protect the borrowers. So, and the borrowers and their heirs. So it's a non-recourse loan. So if they outlive their expected life, or if there's a downturn in the market and the house isn't worth as much, it's a non-recourse loan, so they're never upside down. So they always, have that ability to not be on the hook for any extra. Another fun thing or type of reverse is a purchase. Now you can actually purchase a home using a reverse as well. So that can be kind of fun for people. Can downsize, upsize, right size is what we say, and take their equity from one home, or even if they just have a lump sum of cash, and buy a house and not have a mortgage payment. I was thinking of this when Alice was just making a comment, if they wanted to take out a mortgage to reside their house or whatever. One thing that's kind of cool is if they want to pay it like a forward mortgage, they can. And then down the line, if, income changes or situation changes, then at least they have that option.
To stop paying and then just live out until they no longer need the house, and then the bank would take it back.
If the heirs didn't want it, the bank could take it back. But if they want it, they can purchase it for 95% of the value, or they can just pay off the reverse. Most of the time, they just want to pay it off, because with the reverse, when you enter into it, there's always a substantial amount of equity. So a lot of times when it comes due, they would rather pay it off and then sell it instead of just let it go. Now, sometimes that's, there's always lots of examples, but that's, okay. Yeah.
So if the homeowner buys the house, goes into the reverse mortgage, and they've drawn all of the mortgage and there's no more payments to be drawn out, they can just stay there in the house for 4 or 5 years until they pass away, move to a nursing home, and nobody is going to say, hey, we want our money right now.
Correct. But so back up a little bit, these are for 62 and older. So the requirements are they have to live there. They have to be 62 or older, or at least one of them do. And they are required to take a counseling session. And this is very important. In this, it's government, it's not the bank or the lender, government counseling. And this is something they put in place to make sure that they understand what they're entering into. Because yes, you don't have to make payments, but it's very important that they understand they still have to pay their taxes and insurance. Because in a forward mortgage, you're making monthly payments, and a lot of times people escrow their taxes and insurance. Not always. Sometimes they decide to pay those outright. And so that's paying your taxes and insurance for you. But in a reverse, we don't do that because you're not making monthly payments. So it's very important that they know to pay their taxes and insurance yearly as they come due. If they want to, they can set up a LISA, which is a life expectancy set aside, where the lender sets aside a portion of their equity to pay their taxes and insurance for them, but it does reserve a chunk of their equity so they'd have less access to funds. And like I said, when they enter a reverse, there is always a substantial amount of equity because they want it to last their full lifetime. So someone couldn't enter a reverse and be at like 100% loan to value. It just wouldn't be. So it's usually, for numbers' sake, around 50%. If they're older, it's less. If they're younger, it's more.
And then the only problem comes in is if the market does like it did in 2008 and values went backwards and all of a sudden they no longer had equity because the value of their house went down. I could see that being a problem, but right now I don't think it's an issue.
Well, no, but that's a very important point. And that is why FHA stepped in and did this reverse, the HECM, and it's FHA insured. So when you enter it, you have that FHA insurance piece that requires, or that it's a non-recourse loan. So even if values tank, you're never on the hook for any of that extra. And the heirs could still buy it for 95% of the value of whatever it is at that time. They would get an appraisal.
So just to make sure I understand, if they stay and they've pulled out all the money, but what they owe is more than 95% of the value, they can still buy it at 95% of the value, and FHA insurance kicks in and makes the lender whole. Is
exactly.
That what I understand?
Yes. Yes.
Okay. I wanted to restate that to make sure I had it right in my mind.
And
yeah,
I
kind of
too, Kelsey.
Go ahead.
So something that you said, Kim, was you were like, well, once they've drawn out all the payments, like there's no more to draw. But that, like, let's say that they set up a monthly payment and then it's set up to where maybe their life expectancy is 93 or something like that. They live to be 105. They still are drawing that same payment out at 105. So they're getting way more than maybe the lender anticipated that you would end up using, but the payments never stop, right?
Correct. That's part of that insurance piece, is they will never, if you're doing a line of credit or that income draw, that insurance piece ensures that it will not stop. So if they do live longer or beyond the value of the home, they're still going to get paid until the last person leaves the home. And that's part of that insurance piece. That's important.
Oh, that is interesting. So let's go on to the next question though. How do we qualify? I mean, what are the requirements to get a reverse mortgage? You touched on it briefly, but let's dive into that one.
Yeah, must be 62 or older, live in the home. Before you can even apply, you have to go through that counseling session. We do recommend for their kids to be there. We kind of talked about this. It's not required by HUD or FHA, but we do recommend it so that everybody understands and can help them, because they are, our parents and grandparents after all. It's not credit score driven at all, but underwriting does make sure that they have the ability to maintain their current obligations. If they have car payments or whatever, it's a residual income calculation, and they make sure that they can afford their utilities. There's formulas that make sure they can still afford their utilities, and taxes and insurance, which, as I mentioned, are very important.
And I think you've touched on this, what we can use the funds for. Is there a limit to what you can use the funds for, or whatever they want?
Yeah, it's your money, it's your equity. You can do whatever you want with it. Like I said, sometimes people just want to have it there just in case. I have a really good realtor friend who was kind of excited about it for himself because he's doing real estate. His wife's about to retire. They really, really want to travel, but they still have their mortgage. They still have obligations. And he's like, if we could do that, it would be a lot less stressful, to not have that payment, and they could go travel. So really, there's nobody keeps track of what they're spending their money on. Alice, were you going to say something?
One interesting example that I feel like, our investor listeners will appreciate that we had thought through was the fact that, like, let's say that you have always wanted to own a lake house, but you don't necessarily want to have a mortgage payment or whatever, but you've built up a lot of equity, or you own your house free and clear. Let's say somebody owns their $400,000 house free and clear. You could, in essence, you could take a reverse mortgage that has to be on your primary home. You could take out a reverse mortgage to, let's say, like $200,000. Go take that money, pay cash for the lake house you've always wanted. You have no payments on either property, and now you have two pieces of real estate that are appreciating. So, your real estate portfolio value is going up because now you have two pieces of property. You do have the one mortgage, but then you couple in the fact that you could then enjoy that lake house, you and your family. You wouldn't be having to spend money to go stay places on your vacations. And then you could actually use that as like a VRBO or an Airbnb in the off time, and it could be generating income for you. So we did some calculations over 5 years with some numbers. And in the end, especially if you're renting that property out for a portion of the year, your wealth was more by taking that reverse mortgage out on your primary home and investing in a vacation home after 5 years. So in some cases, it's fun, and it can almost seem like a no-brainer if that's something that you're interested in doing.
What kind of interest rates do they have? Are they the same as a regular traditional mortgage, or are they a little bit higher, a little bit lower?
They're slightly higher. They're probably in the 4s. So on a purchase, you're typically going to have a fixed rate. If you're doing a line of credit or income or a variable, an ARM, then it's going to be an adjustable rate if you're getting paid monthly or whatnot.
So that the interest rate will go up as it goes up and down in the market. Not
yes,
every
and it's
day,
capped.
but
yeah, no, you can do an annual or a monthly where it can adjust, and we give them all those options up front. And then it's also capped, of course. I was going to piggyback on Alice's second home thing. Also, they can buy a 4-plex and live in one and earn income from the other 3. We had talked about that the other day, and it was kind of a fun thought. But yeah, back to interest rates. The cool thing about if they do a line of credit, it grows based on the interest rate that they have. So even if the market rates go up, their line of credit and access to cash goes up, and it doesn't matter so much the value.
We were talking about investing in a syndication at the meeting on Tuesday. I think this might be an interesting way to do a reverse mortgage on your free and clear house, not have the payment, and then take that money, if you had a good investment, to put it into an apartment complex. And they were showing returns over a 5-year period of 12 to 18%. Then you can make a great amount of money, and at the end of the 5 years, pay it off when you get your money back and pay the interest rates. So without having any payments on that would be really cool.
Yeah, that's a fun example we haven't had. Yeah.
Well, that's what we were talking about the other day, or Tuesday's meeting, not the reverse mortgage, but an investment that you would do with lump sums. And they were talking 50 to 100,000. So you could very easily do a reverse mortgage to get that much out of the average Kansas City house if you own it free and clear, I would think. And then you could in theory, invest into an apartment complex, raise and get the higher return with less volatility than the stock market.
Absolutely. Well, what I love about these conversations too is I think that so many people think reverses are for the desperate seniors who, it's a last resort. But if you have like savvy investors and borrowers, it can really be a tool to generate more and more wealth, especially if you've paid into your house for 30 years and you own it free and clear. I mean, I like to think of it as a pension that you pay into for 30 years and then you're going to let it work for you. But again, and it's maybe not for everybody, but for some people it could be pretty fun, pretty cool tool.
All right. Well, we have a lot of listeners that I'm sure are going to be watching this replay. So how do they get a hold of either one of you to learn more from you and about this product? Because I think it's a little bit different than the average reverse mortgage that we've heard about, maybe from, the commercials on TV.
Sure. Either one of us, Alice or myself, you can email, call anytime, and we're happy to answer questions. The process, if somebody's interested, is we just kind of talk about what their goals are and what they need, and then I can present some numbers and a proposal, and then before we go anywhere from there, they have to do that counseling session, which again isn't to persuade them or dissuade them, but just to make sure they fully understand what a reverse is or a HECM and what they're entering into.
And how do you spell HECM?
HECM. It's an acronym for Home Equity Conversion Mortgage, and it's the most popular now, and it's again the FHA insured version, and that's what with the insurance makes it so attractive or safer.
Yeah, it sounds like there's things put in place with this FHA that take care of some of the bad things that we've heard over the past few years of some of the older products that first came out on the market. I know my husband was in mortgages for a while, and they had some they weren't reverse mortgages, but they had one that was just seemed really crazy, that you could just not pay your payment if you didn't feel like it. And it was one of those things that was a really great tool for the right person, but in the average person, it probably wasn't a good product. You got to educate yourself and make sure you have something that works well for you in your situation that you can handle. So,
right.
Yeah, and there is less regulation for reverse mortgages than there is for the traditional forward mortgages. The underwriting guidelines are different, and there's just more leeway. So it is important that you're working with somebody that you feel like you can trust. Somebody who's going to do the right thing, that's only going to use it in the right situations, and who has the best interest of the client in mind. And that's what we want to be. So
excellent. I want to thank you for sharing all your knowledge today.
Thanks
for having us.
Having us.